All right.
Right, ladies and gentlemen, how you doing this afternoon? This is Kennardo Greg James with Trailblazer Television. Very, very special guest on today, man. He's a 32-year-old native of Long, South Carolina. He's worked as a cafeteria manager for Horry County Schools, but saw a problem in the community. He saw too many people dying and not knowing about how insurance works. He now owns In-Shore-ance. There's a special way. He spells that. We're going to get to that later. It's an insurance agency based in South Carolina, and it's changing lives daily. Let's welcome Dan Gore to the show. How you doing this afternoon, my man?
Hey, I'm doing well. How about yourself?
I'm doing good. I'm living, man. That's good enough for me right now. Let's get
Yeah,
into the
thank you for
first
having
question. What motivated you to get into insurance?
Well, like you just read, I saw a lot of people that were dying without it. A lot of GoFundMe's on Facebook, and it was something that was a need for the community. And I saw that there were a lot of people who were doing it that weren't necessarily teaching how it works and how it could benefit people. So I really wanted to, as I like to call myself, be the sacrificial lamb, to go forward to learn it, spend my time learning it, so that I can help my people. But you really have to have that heart to help people to do it. But that's really what motivated me to do insurance, was I really saw people needed help in learning how it works.
Tell us about some insurance plans that will benefit you while you're alive, aka living benefits. This is a very interesting one. I'm definitely trying to find out more about this one myself.
Oh yeah. So there's a lot of different programs that you can add to insurance. I like to think of insurance like ice cream. You can add anything that you want as far as flavor and toppings. Flavor and toppings, just like you said, are those living benefits, those different options. One of them that we have is an annuity rider that you can attach to an insurance program, and it'll help you with retirement. Another one that we have is a critical illness rider, in case you have a critical illness, anything, cancer, um, heart attack, stroke, any of those crazy critical illnesses that are on a sheet that we have listed out. They'll pay you a certain percentage of your premium. For example, I had a client who just got a policy a year ago, who ended up having a stroke, but luckily they had a critical illness policy and they got a check for $50,000. So it's something that you definitely want to look into, those living benefits. Um, it's definitely a whole lot more that you can add to and play around with. There's one called a confined care. There's some that go along with disability. If you get on disability, it'll pay you up to $1,200 a month for 2 years. So it's a lot of living benefits you can add with your insurance and customize your own plans.
Yeah, I know you saw my eyes stretching at some of those numbers you just said, especially when you said 50,000. You saw me go, "Oh, okay, I see what you're talking about." What
Yeah.
are temporary and permanent plans? How long are most of those?
Okay. Well, a temporary plan is a term. A term insurance is going to last for a certain amount of years. Now, after that, it's going to expire, or you're going to have some different options whether you want to renew it or not, which means you want to continue it again, basically starting over a new policy. For those terms, they last any certain amount of years that are available at the time, and it's based on age. So you can either get a term for 10 years, 20 years, 30 years. I've seen some up to 35 years. But after that term is up, then that insurance either has to be renewed or it's going to cancel. So a permanent policy is a policy that's going to be with you for the rest of your life, as long as your premiums are paid. And what they are, they're rated to age 100. But at age 100, whatever the amount of insurance that you have for your death benefit, they're going to pay you a check for that amount. So say you have $20,000 worth of life insurance when you're 20 years old, you live to be 100, the company's going to cut you a check for $20,000. So it's good to have a mix of both, if you really know how to make sure that you're rounded out for all your insurance needs.
All right, all right. How affordable is life insurance? Like, can a family afford be covered at a reasonable price? I know a lot of people think, oh, it's so expensive, or I don't have enough money to do that. But in reality, hey, it really doesn't take that much to be covered. So I want you to just touch on that for me.
And yep, that's a good point, because I actually have a client right now who I'm working with this. She wants to look at getting a policy, or her son getting a policy for his family with his wife and their 2 children. Well, we actually do have a rider that we can add, which is one of those. Well, living benefits are considered riders, but we have a rider that's considered a family rider. And I ran some numbers just a little while ago, and of course, insurance is how much insurance you're going to get is going to be based, or it's going to figure how much it's going to cost. So I did it for a 30-year-old male, and I gave him about $20,000 of life insurance. No, I'm sorry, my numbers are wrong, because I have it right here. I gave him $35,000 of life insurance, and I did his wife, our spouse rider, and the children, our children insurance rider. So now with the spouse rider, it's a term policy that comes along with his policy, and it's actually considered decreasing, which means the value will go down as she gets older. Once she gets a certain age, around 55, it'll start decreasing. But right now she'd have about $55,000 of life insurance. And for the children, each child, up to 6 children, gets $15,000 of life insurance. And so all of that together, with the husband, the wife, and the children, came to around $57 a month. So, you can play with different numbers and see what you have, but you can also just do the spouse, or you can do the children. So if you had somebody who was a single parent, just a parent with some children, and they wanted to get an insurance program, they can get their insurance program and add 6 children, and that's only $3.70 for 6 children a month. So
very good, very good. How important is it to put a will in place for an insurance plan? I know a lot of people kind of overlook this, but when someone passes away, and there's a lot of infighting in a lot of families over where the money's going. So how important is that, would you say?
Well, probate is a bad boy. One thing I learned once I started dealing with finances and financial situations and people is probate. You do not want your stuff to go to probate. A lot of people have insurance policies and don't even tell their family that they have insurance policies, and the beneficiaries don't even know that they're beneficiaries. Now the good thing is that goes to a pool most of the time, and the people can go and claim that money. But I've actually seen a situation where a person had an insurance policy and the beneficiary died before they died, and they never updated it. So now it's almost like there's a struggle to see where this money is gonna go. And if anybody has ever had to deal with it, they would tell you a will is probably the first most important document that you need to have, especially when you're talking about leaving your estate and all, leaving your estate, making sure everything's in order. Second thing, personally for me, that I feel like comes after a will is your insurance, because that's how you're going to be able to leave a legacy to somebody. But without that will, that legacy could get misconstrued. So having one without the other is almost like throwing away one leg and only having the other. You'll still be able to walk, but it's going to be a little harder.
Absolutely, absolutely. What are some questions people should ask their insurance provider before signing across that dotted line?
One big question I would ask is or I won't say one big question, but a big question that I would ask is, how strong is this insurer, to make sure that the insurer that you're getting from, the company that you're getting from, is a strong company. A lot of people want to know about rates, but as far as rates, to me, I feel like value is more important than rates. So I would want to know the different options that are available with the insurance policy, because again, you can get an insurance policy as basic as 1, 2, 3, or you can get something that's going to cover you for your life. It can cover your home. It can cover your family. You know, it can make sure that if something truly happens, that everybody's taken care of. But a lot of people are just thinking, this insurance is just for death. Well, ask questions to find out if you can use it while you're living. So that's one of the biggest things I would ask.
And explain how life insurance can pay you back the money you spend on your premium. Like, how have some of your customers used their leftover money?
See, now this is a fun one. I love this one because a lot of people don't know that there are some life insurance policies that you can actually either borrow money from, or there's some type of policies that will give you what's called a return of premium. So, and that's my favorite one to deal with, a return of premium. But the program that I have, after your term runs out, because it's a term product, but after your term runs out, instead of you having to renew that term or look for a new policy, it's going to give you 75% of all the premiums that you put in that policy. So for some people, depending on how much your premium is, that's a substantial amount. One client, and this is for one of my managers, but one of my manager's clients, they used that money to pay off their house. They only had, I believe it was around $20,000 left, but they had about 2 or 3 return of premiums and used that money from those return of premiums to pay off their house, finish paying off their home. One client that I have now, they haven't got their money yet, but they have their plan already set up they know they're going to go on a vacation as soon as they get their money back. So, and then I have some other ones that have some other types of policies, and they've used their money to get homes. So, it really depends. That's why it's very important to ask all your different options, because you may see something else that may benefit you in that long run.
Yes, and I have one more bonus question. We were just talking about this before we went on air. How can someone set up a program and use that money to pay for student loans? As you and I talked about, is something that's crippling a lot of people across the world right now, student loans. I'm drowning in student loans myself. So what is something that, someone that went to school and they're just drowning in student loans, what kind of program can be set up through an insurance company to help them pay that off one day?
Well, that return of premium definitely can help. There's some other policies that you have that have cash value in them. If time gets hard, you can actually pull from that cash value and you can use it. Now, some of them you have to be careful and know which ones do what. Some of them have a interest rate on repayment. So some of them have an 8% interest rate. So you definitely have to know what type of policy that you have, but that's why you should definitely talk with your insurance agent to find out exactly how it'll work and what you can do and your different options. There's some ones that have annuities attached to them that have no penalty for early withdrawals on some of your policies. And of course, you don't want to use that money. That's meant for your retirement. But if you come across hardship or you come across any time, you can take out that money and draw from that money, and you won't have to pay that money back. So, it's different ways, different options that you can do with it. But the key is setting something up. If you're trying to repay those student loans, and that's in your mind, the key would be setting something up so that it'll give you some sort of return. So that way you can, if you need to pay it off, you have that option.
Right. Very, very good interview. I learned a lot from you, and I look forward to sitting down with you myself, and I'm definitely going to be using your company for my insurance needs. How can they reach out to you, Dan Gore? Where can they find you?
Well, you can find me either on Facebook. I'm Daniel Gore, or you can look at me on In-Shore-ance.com. You can get a free quote there if you'd like to. Everything's automatic. All you have to do is just sign up, and we call it. I don't even have to sit with you. We can do it all over the phone. And my phone number is 843-823-5445. So if anybody has any questions, they're welcome to reach out to me. I have no problems, and I definitely don't charge for the knowledge.
Dan Gore, ladies and gentlemen, man, I appreciate you for joining us, man. I hope you learned something today and you have a blessed day. I'll talk to you very soon.
Thank you. I appreciate you.
Trailblazer Television, Kennardo Greg James, I'm out.